Macau. Again, very, very simple example. There's no secret. It's just all about data. We have data on what we call the hotel rack rate. That's the standard room rate. We have data on holiday booking. We have data on spend on social media, right? Whether a cow came up frequently in the social chat, and all that together, we then spotted a pattern. When a lot of these indicators were moving in the same direction, that probably was a good chance to go into Macau gaming stocks. And there are some fine tuning involved as well. You could actually differentiate what stocks to buy, but I don't want to go into too much detail, it's more technical. But in a way, that's what data means to fund managers nowadays. So that's going back to what I said. We started off with cash because we needed to look at the pattern to see whether these patterns are actionable. And then we have to decide how to put on the best trade to take advantage of these signals. And as a result, we can deliver a long-short strategy that is truly market neutral, zero correlation to stock market with a pure alpha and very low volatility because most of the time we sit on cash. And then quickly, AI. Again, I'll give you some example of how AI can be used. Swap pattern. But again, this is not data mining. There's a big difference between data mining and statistical analysis. But I think the most important point I want to highlight is the independent analysis. But it's a dependence measures that I want to highlight. In the old days, when you do risk analysis, you run Monte Carlo simulation, right? Nowadays, the computing power that we have, and also artificial learning, you can do all sorts of scenario studies based on patterns that are either related or unrelated. By that I mean you can look at stocks that are in different sectors but have the same pricing pattern. Then you can actually drill down on it and run simulation. You see whether they're good for example, portfolio diversification or identifying tail risk. That is, in some extreme cases, they all move in the same direction, even though most of the time they are uncorrelated. And another interesting application is, I already mentioned that earlier, media sentiment. Now you can use AI to read social media data. Right? Much better than VIX, because that's market public information. Everyone knows about it. So what's good about it? I don't know, but everyone loves to trade that and use that for hedging risk. I think that's a bad idea. But this is again going back to what I said. Holding period. Some of them are quite short because you are just gaining information advantage by days, sometimes even just by minutes. But you can try and predict the general trend before the public consensus are published. I think I'll stop here because I think AML and KYC and facial will have more to say on that. Thanks.
Thank you, King. I have so many questions I can ask, but I'll hold on to them for now. I was really, I've known you for a long time. I know the firm Value Partners for a long time, and I've always thought of them as very traditional, bottoms up. So I didn't tell you this. I was very shocked when I got your presentation. I said I had no idea that Value Partners was already doing so much in this space. So it kind of shows how FinTech can sometimes be hidden because you would not have guessed outside looking in that you guys are doing so much already. So Fraser, I'd like to turn to you. I think BOC, Bank of China, has probably one of the most active banks in Hong Kong in FinTech and collaborating closely with Hong Kong MA and then Astri on many projects. So that's very refreshing. Can you please tell us more about that?
Sure. Hello, ladies and gentlemen. I'm Fraser. I'm coming from Bank of China. Actually, we are working. Sorry, I didn't prepare the presentation here, but I would like to share some latest information or latest status of the FinTech development in the banking industry. And what we have done recently in Bank of China in these few years. As I said, as Christopher said, just mentioned, there is some, we have set up a collaboration center with ASRI. We would like to work with the partners, because actually the bank is not a technology expert. But we know what the customer need and what the banking industry need. So we have some business case, and we would like to work with some like ASRI or some startups, so that we can implement the projects. We also joined the work group of the HKMA. Actually there are 4 work groups in HKMA related to distributed ledger technology, DLT. The first one is mortgage. Second one is trade finance, digital ID, and also the digital currency. Bank of China joined all the work groups. For each work group, there are 3 to 5 banks, major banks in Hong Kong joined in the work group. What we have done in the work group, we discuss the business model, what is the problem we face in the banking industry, and also we will study the proof of concept. In the first stage, we have done the proof of concept for most of the work groups. But also in the mortgage, not just POC. Last year, Bank of China also first launched the mortgage property valuation project. In this project, we study the mortgage process. In the process, we would like to find out what kind of the process is easy and efficient for to implement and best for the blockchain implementation. So we study some maybe some of the idea already shown in the paper of the ASRI, but actually we found that it is quite difficult to build a blockchain ecosystem. I think the statement I say it is difficult because it is not technology is not difficult. We can take time to study, but I think the most difficult part is to build up the collaboration and the coordination between different parties. For example, in the property valuation, we need to line up the surveyors, the banks. For example, in the mortgage, we also need to work with some solicitors or some government departments. But we found that it is quite difficult to line up most of the parties. So we choose the surveyor, because surveyor we can line up with them individually. Some of them can join first, so that we make use of the sandbox of HKMA. There is a sandbox scheme, actually we used many times. We use the sandbox because the banks is strictly managed by the regulators, and if all the FinTech initiatives, maybe it is not easy to accept by the regulator. So we make use of the sandbox, and we provide the risk control and also the limited scope of the usage, so that we start with the small number of the surveyors and make use the blockchain technology with ASRI, and then we build up the first blockchain ecosystem in the Hong Kong banking industry last year. This year, in the second quarter, we also launched another pilot project for the trade finance. And I think this year we also started another area related to cross-border initiatives. I think this is what we have done in the blockchain. also in Bank of China, we also built up the big data platform last year, and now we are studying the artificial intelligence technology and studying how this technology can help our banking, improve our banking service. I think it is what we have done recently.
On the mortgage application project, it's live now, correct?
Yeah, already live.
So what is how has it worked out? I mean, you plan the project, now it's implementing. What is the actual, what do you find versus your expectations?
Maybe I can talk about some market performance. We have launched the 5 surveyors. Actually, 5 surveyors already occupied over 80% of our mortgage property valuation. And we launched it in November last year, and up to now, there's not just over 80%. We have launched more than 10,000 cases using blockchain for the property valuation. It streamlined our process. Actually, the process is manual. It's very manual process for the property valuation before. So we implement the blockchain ecosystem between the surveyors and the bank. And the surveyors, all the information will be submitted within the blockchain network. And now there's some more banks, they are testing in the blockchain network now. And maybe I think more banks will be launched in this year or even in coming years.
I'd like to go a lot more into that, but for now, I'll turn to Janos. You're really the pioneer of the fintech industry in Hong Kong. You can, I think you have the fintech website, and you're now running, amongst many things, you're running the Supercharger, which has a very cool T-shirt. Right? That's the Supercharger T-shirt. So tell us a bit about the startup space in Hong Kong, what you've seen, maybe some advice for those in the audience who's thinking about taking that path of doing their own startup.
Sure. Thank you, Liz. So I arrived in Hong Kong about 3 years ago. I used to be in the UK before setting up the Challenger Bank. And at the time, it was only about London as sort of the capital for fintech. And the only second best alternative would have been New York. And I looked east, I looked at Asia, and if a financial center was meant to be a fintech hub, I thought that Hong Kong would be one, and therefore I said, wait to Hong Kong. And I do 2 things. One, I set up an accelerator, which is Supercharger, and the second thing I do is I do a PhD in fintech regulation, because I don't believe that fintech can develop without a proper regulatory framework, or at least we should know whether or not fintech should be regulated. And so what is interesting, if you look 3 years ago and today in Hong Kong, 3 years ago there was about, 80, 90 companies. Today is around 130. So the growth has not been spectacular. It's not like we went from 90 to 1,000. What is also surprising is most of the fintech companies that existed 2 years ago still exist today, which statistically doesn't make sense. Those companies should have failed by now. And what it really means is that you have a lot of companies in Hong Kong which are very successful and big outliers. WeLab raised, I can remember, I think it's 160, 140 million US, and this was pretty much 90% of the fundraise for the whole of fintech in Hong Kong in 2016. This year you have TNG Wallet that just raised 115 million, and again, that's going to be pretty much 90%. So those companies are outliers, and then you have a lot of other companies which are simply keeping the crumbs, and they raise anything from 150 to 200,000, which is nowhere near enough capital. So in terms of, from a startup ecosystem perspective, I think the best is yet to come in Hong Kong, and the best will come when all of these fintech companies that have been surviving for the last 2 years will fail. And the reason why I say that is because you as new founders or as existing companies, you'll be able to collect talent that has been trained, developed, and have a network of people, because they've been working in companies that don't work anymore, but they still have the network, the expertise, and the know-how of actually how to operate within that industry. So the future is bright ahead, but let's wait first to have a bit of a sort of a collapse of few companies. In terms of the sort of big trends, what we saw in Hong Kong. So 2 years ago, fintech in Hong Kong was synonymous to peer-to-peer lending. I think everyone would say FinTech equals peer-to-peer lending, which in Hong Kong perhaps doesn't quite make sense. Clearly from a regulatory perspective, it's not necessarily something that's allowed. And therefore Hong Kong had to sort of imagine itself of what can we do well and how can we do it. I think Hong Kong had a little bit that copycat idea of, well, peer-to-peer is big in the UK, let's do that, and then peer-to-peer is big in China, let's do that. But really there was no match in Hong Kong. And so Hong Kong starts to step by step think on what it's great at, and FSDC comes in and starts saying, well, here are the 5 areas: InsurTech, payments, cybersecurity, RegTech, and wealth. Now, all of these are on the B2B side, the majority of it. So B2B is, instead of using a large technology vendor, you use a small technology vendor, and that technology vendor is just called a startup, but that's pretty much about it. And wealth is one of the most clear shift. 2 years ago, 90% of the robot advisory companies would be on the B2C side. And so they said, yeah, I'm going to change the way wealth management is being done, I'm going to directly go to a retail consumer. And then they realized 2 things. Not necessarily in that order, but the first one was, okay, well, I need to get a license, and that's complicated and expensive, and I don't want it. And the second one is, oh, I need to acquire a customer, and that's expensive and complicated, and I don't actually want to do it. And therefore, a lot of the entrepreneurs said, well, I'm either going to fight an uphill battle, raise a lot of money, which, as I said at the beginning, you don't have in Hong Kong, and therefore they start saying, how can I change my business model by just keeping the technology, white labeling it, and making it available to financial institutions, asset managers, etc. And I think that's reflected for the majority of the fintech companies you have in Hong Kong. The few B2C fintech companies in Hong Kong are anything from 4 to 2 years old. If you look at any recent fintech companies in Hong Kong, they will B2B. So think about Neat. Neat is a prepaid card for current account out individual SMEs. And he started 2-3 years ago. Think about WeLab, they started 2-3 years ago. Think about more recent fintech companies, they're more in the B2B space. I think it's very much reflective of that. Finally, I think in terms of the sector of interest, having the chance of running an accelerator, we get to see a little bit of where the trends are. Payment stays one of the largest sector of startup activity, both in Hong Kong and across Asia. One of the reasons for that, in my view, is that 5 years ago, payment was something that we can all relate to, right? We all touch, we do at least 20 to 30 payment transactions a day, so it's pretty easy for someone to understand the dynamic of that market, the pain point, etc. But I think now it's different. Payment is very much driven by cashless objective of policies of governments. So now the fintech companies that do payment is very much because it's a policy move versus 3 years ago there was a consumer demand for it. Wealth is there, and like I said, it went from B2C to B2B. And then you have new emerging trends. Insurance is interesting because insurance is by no way near a small market. But insurance companies are aggressively coming at it because they are fearing that essentially the reinsurers are going to essentially cut them out. Insurance companies are passed through between clients and the reinsurers, and the reinsurers goes, well, why not move away? And that's putting a lot of pressure on the insurance companies. On the regulatory technology side, I think that's very interesting, and then you finish on that point. You have that. I think in Hong Kong, it's still a very early industry. However, just like you said at the very beginning, and then I'll stop there, when I started in Hong Kong about 3 years ago, FinTech was very nascent as an industry, and I was able to carve out a space, do an accelerator, and we were very successful at it. I think RegTech is where FinTech was in Hong Kong 3 years ago, which really means for you in this room, if there was sort of an industry to really focus on and read on RegTech. It's small enough of a market right now for you to scope it out at pretty much like 100%, 90%, and as it grows, you can keep on growing with it. I think FinTech now has too much diversity, nuances, and unhealthy debates that it would be a bit complicated for someone that tries to catch up on a train to take this one. Especially when I personally believe that regulatory technology has a larger and brighter future than FinTech for the simple reason that whilst FinTech is limited to finance, any industries in the world or in the economy that has reporting, monitoring, or supervision functions, which goes from finance to education to health, to agriculture, to toy manufacturing, doesn't matter. All of these industries will at one point automate their regulatory obligations, right? So that's kind of what I would say on the last 2-3 years in Hong Kong.
So staying on startups for a minute, there's now a lot of resources in Hong Kong for startups. I know you're based in Cyberport, and they have various programs. There are now many different incubators, and I go to pitch night invitations, invitations in my inbox like every other day. So let's say I'm sitting here thinking of a FinTech idea. Where do you suggest I even start? I mean, I know there's probably no clear-cut answer to it, but I'm here, I go home, I have this idea. Where do I start? What's your advice?
So I think if someone has an idea, so we currently, for example, we're building a new product at the moment. And what we've done essentially is we went to the market, we talked to 15 different banks, and we said, hey, here's our new product, do you like it? And now we have 4 that are actually interested. The long story short of this is essentially saying, go, be open, share the idea. The reason why no one will copy your idea is not that it's actually a bad idea, it's that actually building a company is perhaps one of the most difficult things to do, and you actually have to be stupid to do it. And so, very few people will copy an idea and go about and build a company. And therefore, there's really little fear of sharing ideas with someone, and therefore you should get feedback. I think that's the first thing that you can do. Cyberport as a government-backed ecosystem for startup is actually very, very decent. I think Cyberport gets bad press every now and then, but when you see what came out of Cyberport, not necessarily in FinTech, by the way, when you look at the guys at GoGoBan, when you look at the guys at Snapchat, SnapAsk, when you look at all of these companies, very, very successful companies in their own right, and really Cyberport, practically, you're going to get about $100,000 without doing much. And that really gets you off the ground, right? So I think Cyberport is perhaps one of the best things. Accelerators are good, but the reality is accelerators typically prefer companies that already have product revenue and clients. And that's at least where we are. So if you have an early stage idea and you want to build a company, go to Cyberport, get free office space, have time and focus. I'll just say one more thing to the credit of Cyberport. Cyberport people sometimes criticize it for not being central. But actually, when you're early stage as an entrepreneur and a founder, that's maybe not a bad thing. Because you'll be fully focused on your company as opposed to go out and grabbing coffee and having your brain being picked by someone else, right? So Cyberport is actually pretty good for that. And then universities. Universities have both talents that you can look into, but also advice. So Hong Kong University now is going to do legal clinics for founders, both for the legal school, but also from the engineering school. So if you need advice on regulation, if you need advice on coding, you can get essentially free access from the university.
So share your idea, go to Cyberport, and call Janos.
In that order.
So I have this PwC Hong Kong FinTech report, FinTech survey, and one of the headline statistics they quoted was that 82% of incumbents plan to increase partnership with FinTech over the next 3 to 5 years. So since I have 2 incumbents here, I thought I would pick their brain on that a little bit, because we're hearing Janos mostly has B2B companies he's working on. They depend on you as customers, as paying clients, right, to buy their service. So maybe I'll start with you, King. Can you share a bit of experience when you're looking for solutions, you might be interacting with startups? What's that experience been? Any observations and any advice for people who want to approach you and say, hey, King, I have this solution that I want to sell you?
One is to build on that earlier. Fin and tech are actually separated. I think we need to find a way to connect them together because we've come across quite a few startups trying to approach us with their ideas. The problem is that they have this one-size-fits-all approach, and so they need to understand our business models. They need to understand our business model, they need to understand our requirements better. Because, for example, a lot of asset management firms in Hong Kong have a B2B model. So B2C is very new to us and can be a very expensive investment. And regulation is a major hurdle. And then there's another concern. Why would we upset our largest partners, which are banks and insurance companies, by going direct? what is it for me? Right? So they need to understand. So when they come to us, they have to understand where our requirements are, where our needs are. Like for example, servicing our partners in a more efficient way, in a digital manner. For example, cutting out some of our need back office manual work, straight-through processing. So those are the areas probably, from my perspective, are more important than having all singing, all dancing B2C global advisory service.